You know that feeling when you check your bank account and there's less money than you thought there'd be? Not because you went on some shopping spree. Not because you forgot about a subscription. But because somewhere, somehow, the system took a little piece of what you had. Maybe it was an overdraft fee. Maybe it was a late payment charge you couldn't avoid because payday was 3 days away. Maybe it was the extra $2 you paid for detergent at the corner store because you couldn't make it to the big box store across town. And here's the thing that makes it worse. You did everything right. You worked your shift. You budgeted. You tried. But still, you're paying more than someone else would pay for the exact same life. If you've ever felt like the game is rigged, like there's a price tag on being poor that nobody wants to talk about, you're not imagining it. There is an invisible tax that only poor people pay, and today we're going to break down exactly how it works, why it exists, and what you can do about it. Let me paint you a picture. Two people wake up on the same Monday morning. Person A has a checking account with a $1,500 buffer. Person B has $47 until Friday. They both need to buy groceries, get to work, and keep the lights on. By the end of the week, Person A has spent about $300 on their life. Person B has spent $342 on the exact same life. Same eggs, same bus rides, same electricity. But Person B paid $42 more, not because they're bad with money, not because they made different choices, but because being poor costs money. That $42 is the invisible tax. It doesn't show up on a tax form. It doesn't get debated in Congress, but it's as real as any bill you've ever paid. And it quietly drains billions of dollars from the people who can least afford to lose it. Here's what that invisible tax looks like in practice. Person B's checking account dips to negative $12 on Wednesday because their phone bill auto-drafted a day earlier than expected. The bank charges them a $35 overdraft fee. Person A would never see that fee because their buffer means they never go negative. That's $35 of the invisible tax right there. Person B needs laundry detergent, but the big bottle that's cheaper per ounce costs $18, and they only have $23 in cash until tomorrow. So they buy the small bottle for $7, which costs almost twice as much per ounce. Person A buys the big bottle, saves money in the long run, and never thinks about it. That's another piece of the invisible tax. Person B's car breaks down. They don't have $500 for the repair, so they take out a payday loan with a 400% annual interest rate. They'll pay back $800 over the next few months for that $500 loan. Person A uses their credit card, pays it off over 3 months at 18% interest, and pays about $35 in interest total. The difference? That's the invisible tax. You see the pattern. Every single day, poor people pay more for the same things that wealthy people get cheaper or even free. Bank account fees. Late payment penalties because payday doesn't line up with due dates. Higher car insurance premiums because their credit score is low. More expensive groceries because they can't afford to buy in bulk or travel to cheaper stores. Rent-to-own furniture that ends up costing 3 times the retail price. Check cashing fees because they don't have a bank account or their account got closed after too many overdrafts. Laundromat costs because they can't afford a washing machine. Bus fare and hours of commute time because they can't afford a car. Interest on predatory loans because traditional banks won't lend to them. Every single one of these things is a tax. An invisible surcharge for the crime of not having enough money. Let me show you the math, because once you see the numbers, you can't unsee them. Let's say you're living paycheck to paycheck on $30,000 a year. You're working full-time, maybe more. You're not reckless. You're just trying to survive. Over the course of a year, here's what the invisible tax might look like. Bank fees, overdraft fees, monthly maintenance fees, ATM fees, because the free ATM is 10 blocks away and you need cash now. Let's say $300 a year. That's conservative. Predatory lending. payday loans, title loans, rent-to-own schemes. If you need to borrow money even once or twice because of an emergency, you're easily looking at $500 to $1,000 in fees and interest that someone with good credit would never pay. Let's say $700. Higher prices. You're buying the small size because you can't afford the big size. You're shopping at the corner store because you don't have a car to get to the discount store. You're paying more per unit for everything from toilet paper to pasta. Economists estimate this adds up to about 10 to 15% more on household goods. On a tight budget of maybe $8,000 a year on necessities, that's an extra $800 to $1,200. Let's call it $1,000. Transportation. If you're taking the bus instead of driving, you might think you're saving money, but the time cost is real. An extra hour each way on your commute is 10 hours a week, over 500 hours a year. If you could work those hours at even minimum wage, that's worth thousands of dollars. But let's just count the direct costs. Bus fare, occasional ride shares when you're running late, the jobs you can't take because they're not on the bus line. Let's say $500. Add it up. $300 in bank fees, $700 in predatory lending costs, $1,000 in higher prices, $500 in transportation penalties. That's $2,500. On a $30,000 income, that's more than 8% of your gross pay. 8% that someone making $100,000 doesn't pay. They have free checking. They have a credit card with rewards points. They buy in bulk at Costco. They drive a reliable car. They never see a payday loan storefront. And here's the coolest part. That 8% is just the direct costs. It doesn't count the time you spend waiting for the bus instead of being with your kids. It doesn't count the stress that leads to health problems, that lead to medical bills you can't afford. It doesn't count the opportunities you miss because you can't afford the upfront cost of the thing that would save you money later. The true invisible tax is much, much higher. Now here's where people usually say, well, just make better choices. Just don't overdraft your account. Just save up for the big bottle of detergent. Just don't take out payday loans. And if you've ever been poor, you know how that advice feels. It feels like being told to just grow taller when you can't reach the top shelf. Because here's the thing those people don't understand. Poverty isn't a failure of character. It's a failure of math. When your income barely covers your expenses, there is no room for error. No room for the unexpected. No room for the gap between when a bill is due and when you get paid. You're not making bad choices. You're making the only choices available to you in that moment. The choice between an overdraft fee and having your rent check bounce. The choice between a payday loan and losing your car and therefore your job. The choice between the expensive small detergent and not doing laundry. These aren't choices, they're traps. And the invisible tax is the price of falling into those traps over and over again. Not because you're careless, but because the system is designed to catch you. So let's talk about the system, because this is where it gets important. The invisible tax isn't an accident. It's not some unfortunate side effect of how markets work. It's a feature, not a bug. There are entire industries built on extracting money from poor people. Payday loan companies that set up shop in low-income neighborhoods and charge interest rates that would make a mob boss blush. Banks that make billions of dollars a year on overdraft fees, and those fees are overwhelmingly paid by the poorest account holders. Rent-to-own stores that advertise no credit check and end up charging triple the retail price. Check cashing services that take a percentage of your paycheck just to give you your own money. Dollar stores that sell smaller quantities at higher per unit prices because they know their customers can't afford to buy more at once. Even car insurance companies that charge higher premiums to people with low credit scores, even though credit scores have nothing to do with how safely you drive. Every single one of these business models depends on the invisible tax. They profit from people not having enough money. Think about that for a second. The less money you have, the more money you pay. It's backwards, it's cruel, and it's completely legal. Here's how it works at a systemic level. Let's start with banks. You'd think a bank would want all customers, right? More customers, more deposits, more profit. But that's not how it works. Banks make money from fees, and the people who pay the most fees are the people who can least afford them. Overdraft fees alone generated over $15 billion for U.S. banks in a single year. $15 billion. And research shows that just 9% of account holders pay almost 80% of all overdraft fees. Who do you think those 9% are? They're not wealthy people. They're people living paycheck to paycheck. People whose account balances hover near zero. People for whom a $20 miscalculation turns into a $35 fee. Banks know this. They've designed their systems around it. They process the largest transactions first, so smaller transactions are more likely to overdraft. They make it difficult to opt out of overdraft coverage. They set the fees high enough to be profitable, but not so high that regulators step in. It's not personal. It's just business. But the business model is profit from poverty. Payday lenders work the same way. They're not trying to help people in a tight spot. They're trying to trap people in a cycle of debt. Here's how it works. You need $300 to fix your car so you can get to work. You don't have $300. A payday lender will give you $300 right now, and you'll pay them back $345 on your next payday. $45 for a 2-week loan. That doesn't sound insane until you do the math. $45 on a $300 loan for 2 weeks is an annual percentage rate of about 400%. Credit cards charge 18 to 25%. Mortgages charge 3 to 7%. Payday loans charge 400%. And here's the trap. When your next payday comes, you still don't have enough money to cover all your bills, plus the $345 you owe the payday lender. So you take out another loan to pay off the first loan. And another, and another. The average payday loan customer takes out 9 loans a year. They're not borrowing 9 times because they're irresponsible. They're borrowing 9 times because the first loan made their financial situation worse, not better. The payday lender knows this. That's the business model. Get people in the door with a small loan, then keep them on the hook with fees and renewals. It's legal loan sharking, and it extracts billions of dollars a year from people who are already struggling. Even the basic structure of how we pay for things is designed to penalize poverty. If you have good credit, you can get a credit card with a low interest rate and rewards points. You can buy something today and pay for it over time at a reasonable cost, and the credit card company will literally pay you to use their card. If you have bad credit or no credit, you can't get that card. You have to pay cash, which means you can't spread costs out over time, which means unexpected expenses become instant crises. Or you have to use predatory alternatives like payday loans or rent-to-own. The same purchase costs you more, not because the item is different, but because your credit score says you're poor. Your insurance premiums are higher. Your apartment deposits are higher. Your cell phone plan costs more because you can't get the contract rate. Being poor makes everything more expensive, and making everything more expensive keeps you poor. It's a loop, a trap, a tax. And it's not just financial institutions, it's employers too. If you work an hourly job, you probably don't get paid weekly. You get paid every 2 weeks or twice a month. That means there are periods where your bills are due but you haven't been paid yet. That's when the overdraft fees hit. That's when you need the payday loan. Salary workers don't have this problem because their income is stable and predictable. But hourly workers, the people who can least afford instability, are forced to navigate these gaps. Some employers are even worse. They use paycard systems that charge fees to access your own wages. They schedule you for unpredictable hours so you can't budget or plan. They keep you just under full time so they don't have to provide benefits, which means you're paying more for healthcare if you can afford it at all. Every one of these practices extracts value from workers and transfers it upward. It's the invisible tax at the employer level. So where does that leave you? If the system is designed this way, if entire industries profit from keeping poor people poor, what are you supposed to do about it? Here's the thing, you're not powerless. The system is rigged, but that doesn't mean you can't make moves. It just means you have to be smarter and more deliberate than the system expects you to be. First, name it. Recognize the invisible tax when you're paying it. That overdraft fee isn't your failure. That payday loan isn't proof you're bad with money. Those are symptoms of a system designed to extract from you. Knowing that doesn't make the fee disappear, but it changes how you think about yourself. You're not failing, you're being taxed. Second, avoid the traps wherever possible. This is hard, and sometimes it's impossible, but even small moves matter. If you're paying overdraft fees, see if your bank offers low balance alerts or links to a savings account for overdraft protection. Some credit unions offer small emergency loans at reasonable rates. If you're using payday loans, look for alternatives. Local nonprofits sometimes offer emergency assistance, and some employers offer paycheck advances. If you're shopping at the corner store, see if there's a way to get to a cheaper store even once a month to stock up on non-perishables. If you're paying check cashing fees, look into free checking accounts, even if they have requirements like direct deposit. Every fee you avoid is money that stays in your pocket. Third, build tiny buffers wherever you can. This sounds impossible when you're living paycheck to paycheck, and I'm not going to insult you by saying just save 10% of your income. But even $20 set aside can be the difference between an overdraft fee and not. Even one extra bottle of detergent in the cabinet means you're not forced to buy the expensive small one next time. The invisible tax works by forcing you into bad options because you have no alternatives. Every tiny buffer you can build gives you one more alternative, one more choice, one less tax. Fourth, use the system's own tools against it. Credit scores are part of how the invisible tax works, but you can build credit without going into debt. Get a secured credit card, use it for one small purchase a month, pay it off in full. Some apps now let you build credit by reporting your rent payments. A better credit score means lower insurance premiums, better loan rates, more housing options. It's slow, but it's movement. Similarly, if you're paid hourly, see if your employer offers any financial wellness programs. Some companies now offer early wage access or emergency savings accounts. These aren't charity, they're tools. Use them. Fifth, and this is the hardest one, find your people. The invisible tax thrives on isolation. It makes you think you're the only one struggling, the only one who can't make the math work, the only one paying these fees. You're not. Millions of people are paying the same invisible tax, and when people come together, they have power. Community organizations, tenant unions, worker cooperatives, credit unions, these are all ways people have pushed back against the invisible tax. Maybe you can't change the whole system tomorrow, but you can change your corner of it. You can share information about which banks don't charge fees. You can organize a bulk buying club. You can advocate for your employer to switch to weekly pay. Small collective actions add up. But here's the truth we need to say out loud. Individual actions aren't enough. You can be as smart and disciplined and resourceful as humanly possible, and you'll still pay the invisible tax because it's baked into the system. Real change requires changing the system. That means policy. Regulations that cap overdraft fees or ban them entirely. Laws that limit payday loan interest rates. Requirements that employers pay weekly or offer early wage access. Investments in public transportation so people aren't trapped by car dependence. Expansion of public banking options. A real living wage that actually covers the cost of living. These things don't happen by accident. They happen when people demand them, when people vote for them, when people organize around them. The invisible tax that only poor people pay is real. It's measurable. It's documented. And it's a choice. Not your choice. Society's choice. We've built an economy that profits from poverty, that charges people for being poor, that makes it expensive to not have money. That's not natural. That's not inevitable. That's a design decision, and design decisions can be changed. Every person watching this who's ever paid an overdraft fee, who's ever taken out a payday loan, who's ever bought the small bottle because they couldn't afford the big one, you're not failing. The system is failing you. And you deserve better. We all deserve better. An economy that works for everyone, not one that taxes the poor to enrich the wealthy. That's not a fantasy. That's just fairness. And it starts with seeing the invisible tax for what it is, naming it, refusing to accept it as normal, and demanding something different. You're not imagining it. It's real. And now that you see it, you can't unsee it. So what are you going to do about it?